That's right, Julie. I'm here with the CEO of Celsius Network, Alex Mashinsky, here with us live from Miami. And Alex, I wanted to start off. I mean, we're going to talk about Celsius Network crossing that $17 billion in locked up. It's a platform that lets people earn yield on their Bitcoin and cryptocurrencies. But wanted to start with what we were talking about last time we had you on, which was the jitters that Elon Musk kind of triggered in the crypto market. You said, you know, crypto doesn't need Elon Musk, doesn't need it. We saw it dip a little bit again. What's the general takeaway so far that you're hearing about how the crypto world's looking at him right now?
Well, first, thanks for having me back, and thanks for covering Bitcoin 21. The line is around the block. There's over 5,000 people trying to get in here this morning. So anyone who's worried about where Bitcoin is going just has to get an aerial shot of what's happening here in Miami. Like I said before, I don't think Elon is a tourist in crypto, right? He's here to collect followers. I don't think he's here to make the world a better place. And we're gonna go to where we're going with Elon or without Elon.
Well, let's talk about what you guys are doing at Celsius too, because we talk so much about what we're learning at this conference, and I think that it's come a long way in terms of earning yields, you know, beyond just a speculative asset. Bitcoin now being looked at as a way for people to earn money passively. What have you seen with the growth right now on Celsius, and where are you seeing, I guess, the quickest growth right now?
Sure. So look, the Celsius is great, but really our success has to do with the fact that banks and central banks are not giving you your fair value for your money, right? They artificially depressed yields. The Fed lower yields to zero. The banks convince you that you should be earning zero. But what Celsius does and what DeFi does is give you the real value of money. And the real value of money today, stable coins, for example, is almost 9%. You can earn 9% or almost 100 times more than what JP Morgan pays you. So the open market is in crypto, and the manipulated market is where the Fed and when the banks tell you what it is or what it isn't. So,
and what people might think about too is price volatility around that too. You're talking about stable coins, which are generally supposed to trade within the dollar if they're pegged to the dollar. When we talk about Bitcoin, even in the month of May, you were telling me that you saw inflows, net inflows to the platform, even as the price of Bitcoin was coming down. I mean, what does that say maybe to where we're at in the adoption cycle of people accessing networks like yours?
Right. So Celsius is a hodlers community. These are people that see a short time decrease in price as an opportunity to lower their cost for Bitcoin. And they've taken this opportunity in this flash crash, which was also originated by Elon breaking up with Bitcoin, and to load up on buying more Bitcoin, buying more stable coins, earning more yield. And you know, we've seen a nice recovery. Celsius, again, is a magnet for yield, right? Magnet for people who want to save and earn income. And we have thousands, I mean, we just crossed 800,000 users.
Yeah.
And many of them live off that income, right? Now you can basically, it's something that most of us forgot was even possible, is earn enough to actually live on your assets, on the income on your assets.
Which is very different than what we're talking about in a low interest rate environment for dollars and everything else. But when we talk about maybe who's coming to this platform, it's funny, you were kind of making the comparison to Robinhood and what Celsius might be in that dynamic to help people earn here. But institutions continue to get a lot of the attention when it comes to where we're at in the growth of Bitcoin and where prices could go. But when it comes to what you're seeing, I mean, are people overlooking the importance still of the retail investor in the cryptocurrency space?
Yeah, so with Celsius, again, 800,000 retail users who have given us that 17.5 billion in assets. We then lend it to the institution. The institution are the ones paying the interest. So we've collected over $700 million of interest from the institution and distributed most of that. 80% of that went to the retail users. So that is the real Robinhood. That is what you take from the rich and you give to the people who cannot earn that yield anywhere else. And that's what we're here for. That's what Bitcoin is for, right? It's basically, that's Satoshi's idea, creating a new market, creating a new opportunity.
Yep.
And there's several hundred companies who are working on different angles of expanding that vision to become the future of finance.
And what you're describing, maybe people are listening to this and say, hey, it just sounds like a crypto bank. That just sounds like a crypto bank, but the term bank is a touchy one, right? And we talk about regulations and what that looks like. I mean, how big of a risk is that for what you're building at Celsius, and where do you see that regulatory front going in the short term?
Yeah, so look, I think both Treasury and the Fed are looking at anything that is dollar denominated as a benefit to the United States, as a benefit to our financial system. So most of what we do doesn't really compete with the US dollar. I don't see that as competing, and I haven't seen a single politician or Fed member say, oh, Bitcoin or stable coins are bad for us.
Yeah.
So I think the issue is more about, are you part of the closed system? So if you're a bank, you must be part of the Fed system, and you're bound by those rates. If you're not part of that, then you are really living in the DeFi world, you're living in the Bitcoin world, where yields have to do with what the market will bear. And today, Bitcoin earns 6.2%, stable coins earn 8.8%, and anyone in the world can just take their asset, deposit it digitally, bypassing the Fed system, bypassing SWIFT, IBAN, all of those networks, earn the yield, and they can withdraw it at any time without any restrictions.
Yeah.
That is what's so special about what's happening here.
Yeah, there's a few different options out there too. We've been talking about BlockFi, we've been talking about you guys, we've been talking about a lot. But I mean, when you look at that, is that the competition still, or are you mostly focused on people shifting from banks over to things like you guys?
So I think Celsius is the only company that has 5 sources of yield. I think everybody else specialized, like DeFi only specialized on yield on Ethereum. BlockFi was specializing on this arbitrage of GBTC, right? Celsius generates yield from institutions, exchanges, DeFi, and now we announced this morning we've invested over $200 million, additional $200 million in mining. So we're one of the largest miners in North America, and that is a source of yield for our community, right? Because we generate effectively positive yield, convert that into Bitcoin, Ethereum, sell token, and so on, and distribute it to our community.
Yeah, and addressing some of those issues that Elon Musk had earlier, and it all comes back full circle.
And it's all green energy. It's all hydro and wind and power and solar.
Yeah.
So these are the benefit. Most people don't understand that the new demand for power is what's funding wind and solar. If you don't have that, then wind and solar has to compete with natural gas, compete with.
Yeah.
But those plants are basically capped. So if there's new demand, then they build new facilities.
It's a very tricky thing that we're all learning about here. That's why we're here on the ground in Miami at the conference here. But Alex Mashinsky, the CEO of Celsius Network, appreciate you taking the time.
Thanks for having me back.
Swinging by here. We'll have to keep this conversation going. We're going to have much more here from the conference, but Julie, I'll send it back to you.